All right, you should be able to see my screen on the transactions per second. That was really interesting, and one of the projects I've been following for a while is built on Solana. It's a layer 2 called FireDancer. And just to jump into the meat of it right away, they are claiming as much as 1 million transactions per second. So that leads into what Mike was saying about the bots and the AI and everything needing that many transactions. So they're building the hardware for that. It's a layer 2. There's a hybrid version called FireDancer that is live on the market. FireDancer hasn't really launched yet, but they're pushing toward that. And essentially, the reason it's different is on the blockchain, it has to validate, go through the node owners, and that takes a while. Whereas layer 2 is similar to the zero ZK proofs on other chains that like Polygon Matic was coming out with. They would have a kind of unbreakable version of that where transactions could be approved, but then essentially batched to the blockchain later, kind of like the current merchant banking system. So, we're still in the early stages of this. And so the key aspects of FireDancer performance, it can use, well, not to get into the weeds of the techie stuff, but it allows to process transactions more efficiently than the existing Agave client. Network resilience and reducing the risk of network outages caused by bugs in a single code base. Solana early on had some downtime. Early on, Solana, if you guys have been around for a while, we launched M3 Trader in August of 2021, right around there. And the pick that month in the newsletter was Solana, and I had chosen that and said it was about $37. I said it would pull back to 35. That would be our entry, and it did. And it went up 670% or so. Based on that rumor of being able to do $50,000 to $100,000 or 100,000 transactions per second, and then they went down and they got that the prices dropped, went through a bear market. Solana was as low as $8 in the bear market. How many of you were watching that thinking I should buy some and didn't? So right here, but at any rate, so Solana is still a leader, building the rails, potentially the future rails of Wall Street. So I still love Solana. I just I think it goes lower, and if it pushes up, it's going to hit resistance around $100. We'll look at that in a minute. But keeping FireDancer on the radar, it's one to pay attention to. It's not a token necessarily, though. I don't think they floated a token yet. It's technology on layer 2 on Solana, but you can look this up. Kraken has a good article about it. It's client software acts like a bridge between a node's computer and a blockchain, kind of what I was saying. And you can dig into that a little further. It's not quite there yet, but developed by Jump Crypto. Now, Jump Crypto had some issues not too long ago, and kind of like the firm that Mike was mentioning, and that gets and exposed over leverage and has to unwind. So there is that, but essentially, the technology has been kind of building out, and so Solana here. The reason it's important. FireDancer demonstrated an ability to process over 1 million transactions per second, in contrast to Solana's current theoretical limit of 50,000 TPS. So, and that is one of the sectors that I think will be strongest going forward, because you just think about it, MasterCard, Visa, companies that have profit, utility is great, but many companies become unintentional nonprofits, and that's not good for long-term business. So, because they can potentially process that many transactions and earn some money from that, makes it a viable leader. Both of these working synergistically. So, and this far exceeds the transactions currently leading like Visa, because Visa right now, I think it can only do, I'm not going to guess, but it's a small fraction of 50,000 TPS. So that's long term. Building, these are the new rails of finance on Wall Street, on transactions, and especially in AI, where again these autonomous agents are going to be able to do micropayments, microtransactions all day long. This is advancing so fast that it begs the question: why do we need humans? And our only job in the future may be lying on the beach sipping pina coladas. Was reading something about that recently. Actually, it was an interview with Elon Musk saying, all of this will help in many ways in lowering the costs. I was talking to either Peter Thiel or Peter Diamandis, I can't remember, lowering the incremental cost of all of this to basically just the production cost. and so that we will all have a much higher quality. Well, he didn't say higher quality of life. He said eventually a need for universal basic income, which would be doable from the vast reduction in costs to do things. But he said many people will struggle with not having meaning because they won't have a job and won't be necessary. So it is a very interesting time to be alive, and a little bit scary and exciting at the same time. Anyway, I think that's all I want to talk about with that. Mike has covered the news very well as usual. So let's dive into that. I'll close these down. You can again find those on the interwebs. So as far as the head and shoulders pattern, this is one I've been following for a while, and previously thought it would be maybe up here, and we didn't get the right shoulder, right? So this could still be a head and shoulders pattern. And I pointed out yesterday in M3, if Bitcoin can recover the 74K range, then, and even if it doesn't, the potential still is there for a different type of head and shoulders. So if we do get a push up in March, which we should, just counting the monthly candles, 1, 2, 3, 4, 5, it's not very common to see Bitcoin go down 5 months in a row. We did get 6 months back here in August of 18 to the market cycle bottom and low, and in that sense, that wouldn't be a bad thing. Just get it all over with. The old 4-year cycle, and I have another study pulled up showing here, we'll get to that in a minute, where it should stretch out till September. But if we do get, the two scenarios are we get a bounce in March, April, and get a right shoulder, and then that neckline, wherever that lands, the measured move from there would be the same as the head to the neckline, and that puts us down around potentially 48K, give or take. And this purple line there is, of course, let me make sure it is what do we have? Is the 300 EMA? I can't remember. The 100-month EMA. Which hasn't had much relevance in the past. I just have it on there. So anyway, we'll keep an eye on that. But what I was suggesting before is if we get back above this level, what did I say? 74K? No, I've buggered this completely. Where the neckline? If it were something like this, let me go back because I had that where I wanted it for now. And anyway, we'll keep an eye on this. If it can get up here a little bit higher, I think 74K, and then push higher. If we get a push higher, then the head and shoulders is in play. If we continue going lower, then wherever we go to, if we get 6 months of red, I think that maybe the bottom is in. And we could see that in March, April, and then zigzag around a bit before finally recovering and pushing higher. No way to know. And is encouraging, however, that the Tether dominance has rejected at that 8.25% danger level. So we're still in the crypto crash zone, but not necessarily in bear market yet. So we would want to see, or not want, but to officially be in bear market territory, we'd need to be on that 8.25 or above on a closing basis. So, we could see a recovery and we'll get to Bitcoin in a minute, but a wave 4 bounce on the Elliott wave side of things. I'm not a big Elliott wave guy, but point is we've come down so much, getting a relief rally here into March is more than likely, and in which case the downturn could continue throughout the summer. So I wouldn't be looking for any opportunities to go fully long, although there is one coin that is looking promising right now. We'll get to that in a minute, and might be worth certainly long term. And I put a chart of that in the chat recently for long-term accumulation. All right, on the monthly chart of Bitcoin as well, this is, of course, covering the dates from all-time highs and then all-time high breakouts in purple. I won't get into that, but the ranges from all-time high to all-time high between 47 and 49 bars. We've seen this before, and I was speculating, would we see 47 months or 49 months? And so we had the last two cycles have been 47 months from all-time high to all-time high. Give or take a month. I mean, you could have drawn it here and pulled it back into here. So it's in that 46 to 49 months. At any rate, turned out to be sort of October-ish, I guess, with the wick here. Well, these were the same. The wicks, same on that, right around that 126,000. So what we're looking at here specifically, though, in the red boxes is 13 months is the average from all-time high to the lows. So if we count it from October 25, which most do, 13 months puts us down into September of 2026 as the bear low target, or at least when we should start pushing higher. So, we've got, in this case, back in 2018, we hit a little bit lower on these two. and started to recover, but these were the last red candles. So, and then the 14th month started going green again. So, it doesn't mean we have to. This has been a unique cycle on for many reasons. But, if we were to come down in here and bottom in March, April, and then sort of zigzag around a bit, do this kind of chop until usually it comes back, starts going up again, and well, I guess it's a little different each time. But we usually see September, October, see that recovery begin. So we'll be following along with that. And anyway, so nothing very new there. I do have a new study that I want to pull up here, and it's not this one. This is the Gaussian channel that I've mentioned last week. You can always follow along on these, by the way. If you go to Brett Fogel on TradingView, just Google that. I do these studies, and you can always refer back to them and hit the play button and see how they play out. So, for example, this one here, I did this a while back and suggesting we'd head down lower, and thought we'd get a right shoulder. We didn't, not yet. But pardon me. The new study, though, where is it? I thought I just published that. I'm sure that I did, but maybe it's this one. I'll pull it up for you guys, and actually pull it up now from the chat that I put it in just yesterday. So Retire Rich over on the Signal chart, and I thought I put that in there. I did Dashcoin. I didn't do the new study. All right, I'll pull it up. Cool. But again, you can follow these studies along on the TradingView. Okay, Gaussian channel again. I won't cover that. Just touching on when the Gaussian channel goes red. This is on a 5-day time frame, and the price breaks down from its kind of support level below the red. It usually goes down 50% to 60%. So if we were to see, and that's happened numerous times here, 60% here. I don't know if we go back even further. 2012 doesn't happen. 60%, 50%, 60%. So if we had a 50% drawdown, that could put us down to around 47K. I don't know that we get that low. We'll have to see. But yeah, I think probably it would be less. And Mike was talking about sort of diminishing volatility. So maybe it's 40%, right? And as institutions come in, we see less of the parabolic rises, but also less of the kind of capitulation on downside. So the new study that I want to show you guys, because it is new, and where is it? It is called the all-time high tracker. Is that it? No, that's the one we already have. Let's see, guys. Sorry, I thought I had that pulled up. I have it saved. I'll find it in a minute if I need to. It is the daily, weekly, monthly, 5-day, 3-day death cross. That's what it is. 3-day death cross. So you've heard of the death cross. On many people quote it on the 1-day. Generally, that's not really that important. But on a 3-day, you can see here the green is the 50 period on the 3-day chart. A little confusing. And the blue is the 200. So the cross below the 50 below the 200, the green down below the blue. Let's go back in time here. And we can see that from this level, when those crossed, the prices dropped 50%. Let me just get the full amount of it right down to the bottom of that wick. That was that COVID crash. Was that COVID crash? Not quite. That was, no, too early. 50% down from that 3-day death cross. And then this time here, prices were already there. That was only 30%, but it was, we could almost call it 50% because it was within days of it. That death cross was imminent. So we fudged that one a little bit. Arguably, that's okay. And then back in here, though, in 2022, same thing, that 3-day death cross from here, price was already there, went down 50% again. So if we are looking at 50% from where prices are on the death cross, then that could take us down to around 66K, give or take. So, I would be wary and certainly protecting downside. If you're still holding Bitcoin, maybe don't hold so much, maybe sell half for the reasons of buying back lower. I don't think the bottom is in, although we might get a little bit of a bounce. I think this ultimately does come down lower, as we've been talking about. So with that in mind, we've seen this, and we've talked about that. What do we have on the daily charts? So just to dive in, and somebody posting something in Retire Rich there. Trading first of all, crosshairs, Jane Street. Yeah, so that was very interesting. Often there's a narrative we don't know about, and that would explain a lot. So, and I've been speculating in the prior weeks, that after October 10th, likely there was somebody who was in trouble and that hadn't come out yet, and that might have been Jane Street. That would certainly account for a lot of, certainly that $19 billion liquidation and the subsequent continued selling because they had to do that to basically survive. So, at some point, seller exhaustion is when the buyers come back, and we want to watch out for that. On the current chart of Bitcoin, however, it is, so we had this little push yesterday, and around 5 or 6 o'clock, we were up here looking like we were going to break out of this wedge, and certainly, again, by the end of the period, it sold off. So we are still in a kind of a symmetrical wedge here. The upper side coming down, lower highs on this side, higher lows. So this could go either way, a little bit of buying momentum, money flow there. But the part that concerns me is this big sell block here in red. The blue is the fractal from a prior cycle. Doesn't mean it has to play out that way, but it kind of makes sense to me. Lower highs is weakness. We have buyers trying to support it up. The blue bars are from a prior period on Bitcoin. I haven't moved this. This is so far played out pretty accurately. So I would imagine this does come down into the 54 range and ultimately down in the 50K range, even down as low as 46K. And that would line up. Remember that 46K, that would line up with that other study we just looked at. And we see some buyers down in here. But probably, I think the actionable, meaningful part of this is if you start buying Bitcoin at 50K and holding it, it doesn't matter if it goes to 40K or 35K, ultimately, if you believe it'll go back above 100, at least you double. And obviously, many of the smarter people are saying it goes to 1 million. And, Michael Saylor had a really interesting interview that I'll try and share, and essentially saying everyone's got this wrong, and he pointed out the valley of fear. I forget the name of the term of it, but we've seen this before with Apple. The 2 years into the Apple iPhone, there were 10 million users or like 1 billion users, and it was still not really profitable. And then it tanked. It went down like 60, 80, 70%. And then the iPhone 5, it just really took off. And he also points out, so that was where Apple, was ahead of the curve, and they went down more than 50%. But ultimately, look where they are now, most profitable company in history. So, it really does beg the question of what's your time limit. And so if you're in your IRAs and long-term holdings, just holding on, but it is hard. My IRA's been cut in half. I was mostly in Solana and a number of the other privacy coins and things. And it sucks to be adding to it when you think you're doing the right thing, putting more money in, and then it gets cut in half. Using intelligent timing on this as best you can and leaving those in the long-term accounts. But on the trading accounts, certainly I don't recommend holding on and just riding through the whole cycle, especially with altcoins. A lot of these I don't think are coming back to be, especially with the new AI catalyst. AI will be hot next sector, I think. It's not quite there yet. I think privacy coins will still recover here in the end of this year. Barry Silbert was on an interview recently saying he thinks that, Bitcoin, he says, is not going to 500x. It's already done that. He said, but Zcash, he said, can still 500x. Not a plug for Zcash, but I do like this coin, Dash Coin. I like the chart. It pulled back a little bit from yesterday, as we can kind of see hit one of these sell zones. But Dash Coin looking pretty strong. I shared that with M3 members yesterday, and I have been buying this. If it can, we've seen from prior times when it comes off of a low volume bar and the early reversal indicator flags. Last time we saw a big surge, 100% surge on that. It's not quite happening today. And volume is low, so it's one of those keep a tight stop loss. But if the risk reward is there, these are those not home run, but base hits that we might want to take. However, since this is retire rich, the chart that I shared over in Signal, which show the longer term prospect, let me pull that up, because long term play, this has 10x potential, Dashcoin. And a very similar chart to Zcash. So long-term kind of resistance. This time it kind of broke out on this trend line. The secondary breakout is retesting. And if it can resume this trend from around $33, where it is now, $35, and get back to $350, then that's a 10x. So that's something to write down. And again, if you have capital available for long-term deployment, owning and buying Dash here for 10x long-term makes sense. I like the chart. Can it still roll over and come back down? It can. That would be a dollar cost average area. So that would be an audible buy. I'm not going to write up on the study. I will if I can. But, keep in mind, however, that if Bitcoin tanks again and we get a deeper drop, then we'll see deeper prices pull back on this. So if we do run this up, I would sell and take profits into that $60 to $65 range. The couple others that were setting up nicely are kind of didn't really pan out here. Hedera kind of flipped and broke above its parallel channel, a little bit of buy pressure, but we want to be very careful in we are in a bear market, so I'm going to wait on that. These are on my radar, same with SUI, and I want to see them push higher to buy into strength. And specifically on SUI, by the way, because I was on a private client call yesterday and we were looking at this, still in a parallel channel, parallel upward channel. And so we want to see this bounce. If it fails here, then SUI is probably going to go down to 45 cents. The confirmation here would be back above $1 on SUI. A lot of people believe SUI is going to not be a Solana killer, but displace or take some of that away. So it has that going for it, but then again, doesn't mean it can't go lower in a bear market, and that's the kind of thing we know. I think as things heat up again, SUI is going to be one to buy. Strong narrative, transactions per second, especially with the AI narrative that Mike was talking about. So if you wanted to start dabbling there with funds available to dollar cost average on a dip, you could do that. Let me just take a look at the weekly chart here. It's a bit messy, but it could go either way still, and that's the challenge. I do want to just reiterate, because I mentioned it in a video recently, there are really three types of trading philosophies or kind of paradigms depending on where we are. There's the aggressive, where we're in the beginning stages of a bull run, we really want to go hard, maybe use a little margin. There's conservative, where markets are coming down, we might want to catch some swings. And then there's the protective phase or sort of mindset. And protective is where the preservation of capital is paramount. That's where we are now, not taking any risks. We were trading conservatively over in these, trying to catch some bounces on various coins, and the breakouts were failing. So this is sort of a new hypothesis for me, or trading methodology, but I'll kind of clean that up a bit and make it more clear, and maybe do a graphic so it's clear. You've got three mindsets: the aggressive, conservative, and protective, and that kind of covers the bases. And so meaning of that is know where we are and trade accordingly. We have threat of war imminent. That's certainly creating a lot of uncertainty, and markets don't like uncertainty. So all of these reasons, this could go either way. But SUI, I think if we start pushing up higher, would be one to buy and keep an eye on. And eventually these things will. I know we've been incredibly patient since the last cycle and just saying wait a little longer, a little bit longer. And, it seems to be forever. But ultimately, and after most people will have bled out, it will run again. So Monero also looking good, long-term trendline support. And another privacy coin, if not the leading one. I know Mike's been talking about that for years, and for many years, and so well past the 2024 cycle when it was just pennies. So this thing has really weathered the storm. This is a kind of a janky double cup and handle almost. So this kind of a cup pattern double tested the old highs on Monero. We came up and triple tested it, and so. That each time a level is tested, it's weakened. So probably you get another weak retest, and then a fifth attempt breaks out to the upside. But I like the chart overall on Monero. And for long term, Monero, Zcash, Dashcoin, probably going to be the leaders in that sense. So just a quick look at Zcash, though, right here in a downtrending channel, sell support all the way up here. It's not ready yet. Probably Zcash comes down to around 190, maybe even down to 130, and so probably see a bull recovery there. So Solana similarly going down, still going down, a fractal that I laid over from prior area. This would make sense to me, come all the way down to 52. I'd be buying Solana at $50 all day long, you guys. You can see that on the weekly chart as well. Always good to zoom out. And it's interesting. It was a huge cup and handle failure on Solana, and Those are the things that we need to, that's why we need to see these breakout and confirm. So at any rate, it is what it is, but to pull down into this $50 to $55 range, $52 range, I have alerts set. You might want to do the same. And at least 4 or 5x, $50 to $250. Will Solana get to its old all-time highs again? Absolutely. And I think it'll go to 1,000. So, place your alerts. Keep your powder dry. Maintain your patience. Look to buy Solana in that $50 range if you can get it. Okay, a couple other things here. Horizon Coin, one of the privacy coins that I liked so much, and in the end, we got faked out again. The chart was looking reminiscent of Zcash breakout retest, and has since now gone below a multi-year low down here. Now, I've come across some new methodology from some top traders, and I talked about it in M3, how trading has changed in the sense that we have to realize it is a zero-sum game, and it's not a friendly game that we can easily win. Point of that is the market makers and the market maker algos, they have learned, as if they didn't sort of know already, but they've learned that us emotional retail traders, and we're always taught support, resistance, and put your stop losses below support, all of that, that's the best place for them to buy. So often these throwovers and breakdowns where we're like, oh, all right, time to get out, whereas that used to be a prudent strategy and still is in many cases, and I would rather get out just in case and buy back if it breaks back through. But typically the banks are buying here. The smart money is buying on this engineered drop, taking out liquidity, taking out stop losses, and liquidating the longs and encouraging shorts to enter. There's 3 players at this area, not to get into the weeds here, but I'm going to watch for Horizon to come back above that. If it can come back above, then it's a strong buy, I believe. But and as we've seen on these things, typically the 3rd or 5th attempt at a range is the breakdown. So we had 1 and 2 and 3 and 4. So this is a little bit strange, but it was in retrospect, it was not the right call. I was watching these privacy coins break out, and generally that would be a good time to kind of get in. But this huge stop sign we need to remember are these sell blocks. At any point we get into a sell block, we should be selling at least half and or the whole position and wait for stronger signals. So we're not losing, we're learning. And the more you spend time learning on these indicators, the better. So Canton Network is on MEXC. It's another one. It's a cup and handle here trying to break out. And this is one to watch, but not easily to get for everybody. And I would, very low volume. Be wary of these low volume coins. For a home run, moon or bust, $1,000 worth to put in there and forget about it is worthwhile. But for sure, please don't go in trying to make back huge losses with one of these that looks like it has big potential but low volume. I will touch on ICP because Mike mentioned it. The chart tells the whole story. This is not looking good. Huge sell pressure there. I wouldn't be touching this with a 10-foot pull until and unless we're back above this 280 line, and maybe that'll happen. Maybe it won't. But I'm going to keep an eye on it. Filecoin was up 20% yesterday, but as I suggested, it was just kind of short covering and maybe some. Mostly short covering, people coming back in, but stay away from these low volume ones at this stage while we're in protective mode. That's for when we're in conservative and aggressive mode. So with that in mind, the usual suspects are all down. ETH down. Look, ETH's going to continue selling off here. It's in a sell zone. Polkadot, same thing, had a bit of a push, starting to sell off. We are not in a new bull market, and that's why we remain in protective custody, essentially, and staying out of the market. When in doubt, stay out, you guys. So all of these, blood red, and this is, I hesitate to say this, but the retire rich mentality is great if you have that ability to really hold on and not look at it. And it's tough for me as a trader to do because I would rather buy lower and then hold, right? So have to leave that to yourself. But I think ultimately we might wind up blending M3 trader and retire rich as more of a swing trader mentality that is somewhere in between both, because while many people have done well buying and holding, It is hard to hold through 70, 80, 90% drawdowns, and begs the question, is it smart to do that? And a hybrid strategy may be in order. Let me know what you guys think. Certainly there's a trade-off between time and managing these things and just set it and forget it and look at it in 5 years. But the challenge there and the danger there is, anything can happen. They can go to zero in 5 years. And so at any rate, keeping an eye on Hyperliquid. This is sort of an expanding downward channel. It's generally bullish. And I like Hyperliquid, but it's not easy to buy unless you're buying it right on the Hype exchange, HYP. Hyperliquid.xyz is the website. The rest of these all blood red for the altcoins. Altcoins are essentially dead for a while. I think that's about all we had to cover here. How are we doing on time? We're right at the hour. I will look at the chat here and see. Let's see, people have to run. All right, Mike had to go, David had to go. Dr. T says, since Bitcoin leads alts, would it be wise to wait till Bitcoin goes lower to buy? Yeah, exactly. If you're referring to Dashcoin, that is a good question. For everything else, yes, exactly. Follow Bitcoin and also follow total market cap, because that tells the story. Total market cap has been repeatedly rejecting at the midpoint of this sell block. So overall, I'm still bearish. I still think we come down in this range, down to around 1.87 total market cap, even down to 1.77. What did I say? So between 1.77, let's just 1.75 to 1.85, easier to remember. But, this green zigzag I modified slightly. The measured move on the bear flag for the total market cap puts us down to right down here around 1.87 trillion, and we are not there yet. There's nothing to be bullish here. We're rejecting at the 50-day exponential moving average. We're below the ice, you guys. We're drowning. Remember down here, this is where our crypto man superhero fell below the ice and swam around, gathered the strength, tried to get back above the ice, couldn't find the opening in the ice, and has been drowning, and is continuing to find that hole in the ice, popped his head above here, and can't find the hole. So basically, Crypto Man's going to the bottom of the ocean for a while. And so, I don't know, you guys, I just come up with these so you understand this, and have sometimes people are less visual and more analytical, or I don't know. The analogies are easier to remember, right? One of the big memory hacks I ever learned, if you've heard this, just try to visualize, clues or numbers in a storyline. That's how the big memory masters do it. They do a visual story that helps them remember individual points. Easy to remember phone numbers that way too. Just do an auditory remembrance of the first three. Generally, the area code's easy because it's the same city that you're in. Remember auditorily the first three, and then visually on a keypad the last four. So that's how easy to remember phone numbers. So anyway, that's all I have for you guys. Hang in there, and we'll continue to monitor this. I yesterday was saying silver looked like it was ready to go again, but it's starting to bearish engulfing candle here. So I would be cautious out there. The VIX is, nothing terribly scary. I think honestly, the whole world is waiting and watching to see what happens over in the Middle East, and it could go in either way. Either if we have a swift victory, it's still, and it's nothing to be casual about. A lot of people die when that happens, but and then what, right? But the best case scenario is there's a deal in the Geneva, we walk out, and Trump's just been posturing with the boats and the armadas and the Iranians. Just everyone says, all right, that's cool. Let's just kind of back off a bit. But it doesn't seem likely we'll be doing that and remaining friends. So I think let's see how it plays out. When in doubt, stay out, everybody. So take care. I'll talk to you guys soon. I'll update you accordingly, and consider. I will leave you with this. Consider, if you're holding on to things, consider selling and taking partial losses, because likely we're heading another 20% lower on the total market cap, and similarly Bitcoin would follow. So if we do it this way too, from kind of here down to there, it's 20%. So if you could, it's no fun to take losses, but if you could do that, sell half, and make a mental note to take that money and put it back in at 52K, you'll be able to buy more. And instead of this being your break even, it cuts your break even to here, cuts it in half. So keep that in mind. Is it possible we rally higher? Anything's possible, but it's so unlikely. We're putting in lower highs, huge sell block all through here on Bitcoin. And it's like a 90-10, 80-20 we go down. So I wouldn't hold on. And if that happens, altcoins will go down 30%, 40%. It may never recover. Some of these are never coming back. We want to focus on the hot narratives the right next time around and some of the ones we've been talking about. But like your pulse chain and other things like that, and they're probably not going to come back. So, all right, you guys, that's all I have. Talk to you soon. Bye.